Alright, for this video I want to go through a sample form 8936 for a clean vehicle tax credit, and this is going to be for the 2023 tax year. Now for this scenario we're going to have an individual taxpayer, single filer, but our taxpayer is a self-employed individual, so he completes Schedule C to report his business income and expenses. And so ultimately, our taxpayer here, Adam, is going to owe federal income taxes on his net taxable income, but he's also going to owe some self-employment taxes. And we're going to see how, when claiming the vehicle tax credit here, you can only use the credit amounts to offset your federal income taxes. You can't use them to reduce your self-employment tax liability. So we've got the full return, which we'll go through. I've got one slide covering some background on the credit itself, and then some more details on the fact pattern. And then we've also got the fueleconomy.gov website, which is a great resource that will provide you a list of all the vehicles, the years, makes, and models that qualify, and the amounts. And then they've also got a lot more information on requirements as far as who qualifies, what are the qualified vehicle requirements. So it's a good resource for anybody looking to purchase a vehicle that's an EV vehicle, or they've already bought one and they're trying to figure out how much of a credit can they get. So let's start with the slide, and then we'll have a look at the tax pattern, taxpayers fact pattern, and the Form 1040. So the clean vehicle credit, these are for vehicles placed into service after 2022. So we're talking 2023 going forward. And generally, we're looking at vehicles that are drawing power from a battery, and they meet a variety of other requirements. You can look these up specifically on the fueleconomy.gov website, which we were just looking at. And then the IRS certainly has some resources available on their website as well. And so in our example here, we're going to have a taxpayer that purchased a vehicle in November 2023, and so he bought this Pacifica, this Chrysler Pacifica van, and so he's going to be able to qualify for a $7,500 tax credit. All right, so what are some of the credit amounts and other issues that we need to be aware of? Well, generally, the credit is going to be a maximum of $7,500. That's what you're eligible for. But more importantly, this credit is non-refundable, and it's non-refundable against your federal income taxes, right? So it cannot be used to reduce your self-employment taxes, right? Not directly, at least. So what we mean by that is, if you have some business or personal use on the vehicle, you might be able to get a credit, not just only to reduce your income, but to the extent that you have a business use component for the credit, that becomes a general business credit reported on the 3800, subject to different kind of rules, carryover requirements. The personal use credit, if you're just using it for personal use, it only offsets your federal income taxes, and to the extent that you can't use all the credit, it expires, right? And so there's no carryover. So let's look at our fact pattern here, and then we'll see kind of how this works out for Adam being a self-employed individual. So he's single filing taxpayer in 2023. He's a self-employed marketing consultant. And so all of his income and expenses are reported on Schedule C. So we have a quick look at his Schedule C. We've got Adam taxpayer marketing consultant. We can see here his total income, $75,000 in gross receipts, and he's got various expenses down here for a net profit or loss of $67,600. Now, no car or truck expenses claimed, no vehicle expenses, because he just works from home, so he didn't need the vehicle at all for work. All right. Now, in November, Adam purchased this new 2023 Chrysler Pacifica vehicle, which is eligible for that $7,500 credit. And again, Adam works from home exclusively, and he just did not use that vehicle at all for business in 2023. That's important because if there is a business use element, you can bifurcate the credit. But in our case, we're just still going to claim it all as a personal use credit. Now, Adam's taxable income is $39,179 and total federal income tax liability of $4,481. And then he owes $9,551 of federal self-employment taxes. All right, so let's have a look at his return, the income items, so we can get a little more detail before we actually look at the credit. So when we look at Schedule C here, we can see we have net profit or loss from this business, $67,600. And then if we look at the Schedule SE, where we calculate the self-employment tax, he's got self-employment taxes report on line 12 of $9,551. All right, so if we're looking at the page 1 of the 1040, we have the $67,600. That's the income flowing through from Schedule C. We have the deductible part of the self-employment tax, which is $4,776. And so his AGI is the $62,824. Now he gets his standard deduction of $13,850. And because this is a qualified trader business, it's a specified service trader business, but still gets the QBI deduction of $9,795. So when everything is said and done from this business enterprise, his net taxable income, $39,179, and so the total income tax assessed on that net taxable income is $4,481. Now, the $4,481 on line 18, this is the amount that we use to determine how much of that credit can be applied. The self-employment taxes are reported below this line item after we factored in the credit. So there is the $9,551 of federal self-employment taxes. And when we look at this 8936, what we're going to see is the credit amount that's calculated is limited to our tax liability up here. We cannot use the 9551 to be able to claim some of this credit. All right, so let's have a look at the 8936. So first thing is always do part 1 to see whether or not you qualify at all based on your income. So our modified AGI here from line 11 of this year's return is $62,824. All right, so if we go to page 1, line 11, 62,824. And then the AGI that Adam had from last year is $78,050. So remember, for this year, you have that election to use prior year income if it's lower in order to try to qualify for the credit. In both cases here, both of his incomes are below the $150,000 threshold, so that's not a problem. So when we look at the credit now, we go to Schedule A to figure the amount of credit, and then we come back to parts 2 and 3. So Schedule A is completed for each vehicle that you're claiming the credit. So we've got the year, the make, and the model of the vehicle, and then the VIN number on the vehicle. Line 3, we enter the date that the vehicle was placed in a service. So he bought it and drove it off the lot on November 5th. Question 4, was the vehicle used primarily outside the U.S.? In our case, no, right? Adam lives and works full-time in Florida. So this is a vehicle being used in Florida. Does the VIN belong to a new vehicle placed in a service during the year? And the answer is yes. So now we can go to part 2. Part 2 is where we calculate the amount of business use portion of the credit, if any. Right? So did we acquire the vehicle for use or to lease to others and not for resale? The answer is yes. Right? So we acquired it for our own use. Right? This is not a lease. So we move on to line 9 and we pull up the tentative credit amount that's available on that website. So the fueleconomy.gov website says we get a $7,500 credit, and this is confirmed by all the materials that were provided to us by the dealership. Now the business use percentage is 0, right? We have no business use for this vehicle. So on line 11, we multiply 7,500 times 0, and it gives us a $0 credit portion for business use. Line 12, part 3, is where we calculate the personal use part of the credit. So we subtract line 11, 0, from line 9, 7,500. And so on line 12, $7,500 is the personal use portion of this credit. So we can go back up to page 1 of the 8936. Part 2, business use credit is going to be 0. And in part 3, line 9, the personal use credit, $7,500. Now, here's where we figure the amount of credit that we're actually going to be able to claim. So on line 10, we enter the amount from Form 1040, line 18. So if I go back to page 2 of our 1040, line 18 is $4,481. So I enter $4,481. We don't have any other personal credits that are being applied. So line 13, the personal use part of the credit, we enter the smaller of line 9 or line 12. The smaller amount here is our actual federal income tax liability, which is $4,481. So of the $7,500 credit, the amount that we can use is $4,481 because that is the limit on the amount of tax that we owe for the year. So we take our $4,481 and we report that total on Schedule 3. And then Schedule 3, ultimately, it flows back up to page 2 of the 1040 on line 20. Right, so we've got federal taxes, $4,481. The amount from Schedule 3, line 8, which is $4,481. And so it reduces our tax before the self-employment tax to zero, right? So now we have to enter, okay, well, how much tax do we owe from the self-employment taxes? And we get that amount from Schedule SC. So we do owe $9,551 of self-employment taxes because we are a sole proprietorship and a self-employed taxpayer. So this is really important, right? Because what we want to be careful of is if you hear, well, I'm going to get a $7,500 credit, a lot of times that's not the case, right? It really depends on, are you an employee or are you self-employed? How much overall income do you have? How much tax are you going to owe? In this case, of the $7,500 credit that Adam was entitled to, he was only able to leverage $4,481. All right, so that covers it for this tutorial. I hope that was helpful. Any questions, feel free to leave a comment below. And I look forward to seeing you again on the next one. Thank you.